Hi there. How's everybody doing? This is Sergio Sais with the Real Estate Hedgehog podcast. This is podcast number 38, so we're moving along really good. Just want to let everybody know that last week, or about a week and a half to 2 weeks ago, I was a little bit of a hurt bag, had a throat infection. It was the pits, but I'm so happy to be back again to talk with you guys. And I'm here with Sam, my partner and buddy. And Sam, how are you doing today?
I'm staying busy. Lately, I've been dealing with a lot of, I guess you could say, secretarial duties. A lot of the administrative duties of investing, sending out forms, sending out copies, making sure receipts are paid and filed away. But there must be a flu bug going around because my kids are all sick and I have to keep them home from school today.
Yeah, but you know what? You mentioned that administrative work. We don't really talk too much about it because that's not like the sexy part of real estate investing. But I know you and I were talking earlier, and it's actually a very important part. And maybe we'll do one of these days. We'll do a podcast just on the administrative side because, like I said, it's not the sexy part. But if you don't have that administrative part of it down right, you can get sued and you can lose some good money, and that's no fun at all. So maybe we'll do that in the next couple of sessions. Maybe we'll do something on the administrative. We'll bore our audience with administrative stuff, but it'll be a good discussion, I'm pretty sure. Anyways, so as I said, this is number 38, and the real estate market, I mean, it's really crazy. You talk to anybody. We were meeting with some friends last night for a little dinner. I was talking to a real estate agent, and she was telling me just that really, she told me two things that were kind of interesting. Number one, just how interest rates are just really hurting everybody. It's really it's really blunting the, what do you call it, the real estate market. But she deals mostly in residential. Okay, so that's that, and we'll talk about interest rates today, I think. But the other thing that she told me, and which was very interesting, is that she says that at least somewhere between 25 and maybe up to 50% of real estate agents are good at selling real estate, but not good at investing in real estate.
I've heard that before. I've heard more than that. I've heard that most real estate agents don't invest.
They don't invest. They're good at selling, and thank God for them because they help us out, but they're not necessarily investors. So one of the reasons I want to bring that up is because if you are out there in the audience and you're thinking, you know what, I'd like to invest, I should talk to someone that's in real estate. Oh, I know what, I'll call my buddy who's a real estate agent and see if he can help me invest in real estate. What he'll be able to do is help you buy a piece of property, not necessarily invest in that piece of property.
No, I know that very well because I have had agents where I was hoping they could help me to invest better.
Yeah.
And the stuff they bring to me, I'm baffled that most agents have no clue what investing is all about. They don't run any numbers.
They don't. So number one, they want to sell you a piece of property. But if you start at, and I know you've told me of stories like that, where you're asking them about certain information that's important to an investor, things like, debt coverage ratios, things about like cap rates. Yeah, sometimes they'll know the cap rates, but not always. They don't know how to use them. There's a lot of stuff they don't know how to do because they themselves are not involved in that part of the market.
So I used to always wonder in my mind, if a good deal comes around, why is it still there? Because why is it being listed and why has that agent not snagged it? There's so many reasons, but the predominant reason is because agents are often not investors.
They're not investors.
They don't see it as a good deal, for one. Sometimes, the reality is they don't make as much money as we perceive that they do, or they don't manage it well, so they don't have the money to take it down. And I've actually heard this part too, where many agents just feel that it's too risky. They're in the market as agents, but they feel investing is too risky.
Exactly. So it's very interesting. And then, of course, real estate agents are just human, and they have the same issues most of us do, with fear and with the anxiety. They suffer through the same thing. It's no different. I mean, it's not. And you know what? And we've been very honest with our audience where we tell them, sometimes we get scared, sometimes we're afraid. And then it's just a question of just trusting those numbers, trusting your experience, and going for it. So it's been a crazy week. What have you heard about interest rates recently? What's going on?
They're going up, and there's no slowing down. For a while there, we were thinking, oh, there might be a 50 basis point, 75 basis point Fed hike, and then they'll go back to 50. Oh, it's been consistent 75, and there's no end in sight.
We've got, I think they're going to do an interest rate hike this week, right? This month. They did one already this month.
Next week.
Next week.
Basically into November, early part of November. Right now we're recording this October 24th. So in about 2 weeks, there's going to be another interest rate meeting, and there's a likelihood, or the predictions all indicate that they're going to hike it again. We don't know how much, but based on the trend, it's probably going to be at least 75 basis points. So 3/4 of a point higher.
Right, 75 basis points. So same thing. Yeah, I've seen numbers where people that make these, I don't want to call them predictions, but they're looking into the future to see what's going to happen. There's like over a 90% chance it's going to be 75 basis points.
And they got another meeting in December, and they're probably going to raise it again.
And and for that one, I've heard that they may come down a little bit, maybe down to 50 basis points.
That's what they said about this one, and they changed their mind in the last 2 weeks.
Yeah. So what does that do? So those are the Fed funds. That's not those are not the mortgage interest rates. So what are we thinking? Where are we thinking they're going to go because of the Fed fund increases? What do you think?
So right now, for your traditional 30-year mortgage with good credit for a residential loan, we're hovering around 7%, right? I think I've seen as low as 6.9, but I've seen as high as about 7.4, 7.5 as of today, end of October 2022. If they raise it another 75 basis points hike in 2 weeks, that could possibly translate to the average interest rate hike to go from the low sevens into probably the mid to high sevens. There's a high likelihood that with good credit, it's going to be around 7.5 to 7.75. And if they do it again in December, there's a high probability the consumer loan for mortgages will probably be in the 8s.
Yeah, I am thinking that by the end of November, they'll be just below 8, and then in December, they'll pop over into 8 territory. So what'll be interesting to see is what happens after December. Will the Feds decide we're right on the brink of, like I said, a lot of people think we're in recession already. I personally do.
I think we are in it as well.
Yeah, with inflation, with the interest rate hikes, things are really slowing down. So I am thinking that come the first and second quarter of next year, we'll be starting to bump up into the 9 and maybe even 10%.
So here's a little history, a short condensed version for the viewers, right?
Okay.
First off, why is this happening? It's happening because the federal mandate for the central bank right now is to quell inflation, and our inflation is not quelling at all. In fact, after that initial pop of about 9% back earlier in the year, it dropped into the mid 8s, but then it crept back up again in the last couple of data reviews. And so because of that, they realized that with the slow, methodical, 75 basis points hikes, it's not doing it. And the only tool right now that they have full control over is these interest rate hikes. There's other tools, but this is the one that they have full control over. So by doing these interest rate hikes, what they're trying to do is squeeze the money out in the economy by raising interest rates so businesses can borrow less.
Right.
And therefore, there'll be less money flowing in the economy. It'll shrink the economy a little bit. And their hope is that it would drive inflation down, because there's so much money free flowing currently based on all the stuff that happened due to COVID and this and that there's demand out there, or people are willing to pay more constantly. And I know people out there are saying, I feel the pain, the pumps and this and that. But the reality is people are still willingly paying, and the consumption hasn't retarded. And so therefore the inflation remains high.
Yeah, no, absolutely. And it will, and you're absolutely right. until that excess money gets sopped up and gets taken away, the demand will still remain. And again, what the federal fund, what the feds are trying to do is push that demand down, force it out of the market. But again, when you do that, you're risking recession. And I don't know, it's going to be a tough one. I'm glad I'm not the one making the calls. However, the question now remains is, for us investors, what are we doing? You know what? And I know that one of the things that you and I are always doing, obviously, is we're always looking for deals.
Yeah.
But the one place that we do like to look at is the time on the market.
Yeah.
That properties are at. And I'm seeing properties stay, whereas before they'd be gone within, I don't know, 10 to 14 days. You know, I mean, literally, I would see something come up. Oh, let me look at it. Let me, I'll call Sam, see what his thoughts are. 3, 4, 5 days go by. I call the real estate agent. Oh, it's gone. It's already under contract. I mean, it was happening that quickly, but not right now.
Yeah, it shifted. Just 4 or 5 months ago, it was not so. The change really occurred around February, March of 2022. Yeah. Now we're in October. Things have changed. With these interest rate hikes, things are staying on the market longer because sellers aren't dropping their prices fast enough to meet the shrinking amount of debt that can be obtained by buyers. Buyers are backing out or being more hesitant because the debt costs more. Not everybody can come in and say, oh, here's $1 million or here's $500,000 cash. That's few and far between. Most people, they'll borrow 60, 70, 80, 90% of the money from the bank, and the bank interest rate makes a big impact on the real estate market. So for investors, I think this is actually a good time, because we've been in this downtrend. The days on the market has been growing for probably the last 3-4 months steadily. Yes. I think we're at the point now where sellers are starting to understand they're not going to be able to get what they want. And therefore, I think it's become a buyer's market again, because the days on market is almost back to traditional times where it's 60 to 90 days on market, because this has happened for the last 3-4 months. Right. And so the consumer or the investor, they go in and they see something that looks like it might pencil out. This is the time where you can make that low ball offer, and you may likely get a response, an acceptance or a response to kind of meet in the middle. Whereas before, no, the real estate agent will even tell you, don't even try to lowball. Here's what we're getting. Come in with something higher, or don't make an offer at all. Yeah, don't even so times have changed, right? And now, real estate agents are picking up your phone faster. One ring and they're, hi, how can I help you? What's your first name? What's your last name? What are you interested in? Right. Whereas before it's, hey, I'm busy, please leave a message.
Right. And you know what? And I know you and I have talked about the fact that, like, right now, you have buyers and sellers, obviously. Yeah. And the advantage is going to the buyers. And the big advantage that buyers have is that we don't have to buy. We want to, but we don't have to. Now, on the seller side, they kind of sort of have that too a little bit. If they're not getting their price, they don't have to sell either, right? If it's not.
Well, see, there's two types of people. There's investors and non-investors. So,
well, that's true too.
Yeah. For this particular podcast, we're going to focus on the investor, meaning we're looking to buy an investment. Right. The issue is we don't have control of the seller. The seller may not be an investor, so that might be different.
So, yeah, but the seller can also just not sell if he doesn't want to. The difference, though, if you're working with an investor or trying to buy from an investor, I'm glad you brought up that distinction, that on the seller side, they could be investors or they could not be. If they're not, if they are investors, they're probably, the reason they're putting that property on the market is because they're coming up against a time frame, the 5-year mortgage, the 7-year mortgage, maybe even the 10-year, who knows, right? That they're getting to that place where they either have to refinance, and now with the interest rates being as high as they are, probably not a very good thing to do. But maybe they do have to sell. So they may be able to say, you know what, Sam, Serge, I'm not going to accept your low ball. In fact, I'm going to pull it off the market. And they might be able to do that for a few months, 2, 3, 4, 5 months. Yeah. But they may be running up against a ticking clock, So
the other side is if they're not an investor, and let's say you're out there going to buy a traditional property, 1 to 4 units. So those guys are a little different. Those guys normally are on 30-year notes. So they've got a fixed debt. But if the days on the market has grown to the point where oftentimes that when you hit that 60-day mark, most people are very emotional. You got a husband and wife, they got a house, they want to put it up for sale. A week into it, the husband and wife already started looking at other properties. They got no offer, no bites yet. But next thing you know, they found a property they're in love with. And this thing's been on the market for a while, and they're afraid they're going to lose out on the other place that they want to go to, and interest rates are rising. You have a chance to go and possibly give them a more reasonable offer, and they may just bite, because it might be one of those situations where the wife really wants this other property, or the husband really wants this other property, and they want to move on already. They have it in their head, this vision, and they're willing to lose a couple $100,000 now just to go ahead and move on with their lives. And investors different, because it's all about numbers and money. Right. And so outside of what you just talked about, where their time frame is coming up, if it's not coming up, it's oftentimes the investor that will say, no, I'll just hold off, because there's no emotions involved.
And there's no, and that's fine. That's not that big of a deal. So again, so what is our job? Our job, again, is to find those deals where somebody does want to, at least engage, right? Yeah. So like you said, you throw it out there. If they buy, if they want nothing to do with you, they won't even respond. And we know that happens to us all the time, right? But if they respond, okay, now you may not get that what you're offering, but chances are they're not going to get what they're asking for either. And somewhere in there. But here's what I'm going to say about that, because I know I'm going to go into an area that sometimes there's a little controversy. I say that for the investor, if you are an investor, and I know you and I, we do consider ourselves investors, is that when you're buying that piece of property, that you are making a profit on the buy. And we've talked about this. And what we mean by a profit on the buy is that you're getting some sort of cash on the positive side on day one. Now, it may not be the cash that you eventually are looking to get through rent increases, efficiencies, what have you, but you're making money. You're getting that positive cash flow. To buy a piece of property where you're losing money, and I'm not saying that there isn't a place for that, but generally speaking, from an investor's point of view, a business person's point of view, you wouldn't be buying a business that's losing money unless you need tax write-offs or something. And I don't know too many people that want to lose money just to get a tax write-off.
I'll give you one more, man. So I've had this happen to me more than once, because my wife, she's always around. Yeah. She's always eavesdropping and kind of peeking or figuring out what I'm doing, the shenanigans, as she says, that I'm doing.
Sure, right? Yeah. No, I don't blame her.
I remember last year, I know your wife probably does that too.
Yes, she does.
I would throw offers out because she would overhear my conversation with random realtors, right? I would call them, and let's just say a property, we'll just give it some numbers, 1 million, 2 million, 3 million, right?
Right.
I would throw offers out that's like $200,000, $300,000, $400,000 below. 4 or 5 of them at the same time. And the reason why I go that low is because I don't want it to be so reasonable that all of a sudden they all bite and I can't afford any of them.
Right.
But what I'm doing is I'm putting basically my bait out there, just see where is it going to catch. And if it kind of catches, then that means that person is in a situation that they want to walk away from.
Exactly.
Or else they wouldn't be willing to take this 20% haircut, right?
Right.
And so that's what I was doing. And it's funny you bring it up in the sense that, you want to make money on that buy. You look for properties that are just at the edge of your affordability range. You give it a low ball offer, low enough to know that if they bite, then you're good. If they don't bite, just walk away because you weren't going to make money on it anyway.
Yeah.
When you and I run the numbers, if we're looking at making 3, 4, 5% on some deal based on what we're putting into, with all the other risk associated with it, we're probably not going to be offering that kind of full price offer. We want to see enough of a buffer in order to, I guess you can say, overcome the risk factors.
Yes. No, absolutely. So it's an interesting game that we play. It's an interesting time that we're in right now with, again, interest rates going up, the market taking a turn, sellers not really wanting to come down, buyers trying to force the sellers. it's actually a fun thing to do, an interesting thing to do.
Yeah.
It doesn't have to be a stressful thing, you know. To me, really, the stress comes once you actually got your deal, because now you have to
Yeah.
manage that property and everything. Everything before that is kind of like a fun thing. It's like it's a
Well,
game.
I would defer back to, remember that video I did on using that NOI to calculate your offer price?
Yes.
Yeah, that formula is a quick behind the napkin formula. You know what to offer.
Yeah.
You know, but because of the current situation of rising interest rates, days on markets rising, less demand for housing, I think investors now have a better shot at negotiating lower deals, more contingencies, more contingency periods, more due diligence available versus having to just come in over the asking price, waiving contingencies, waiving inspections. Right. Those days are gone.
Those days are gone. No, absolutely. So again, my encouragement to our audience that is looking to invest in properties is to, number one, just be patient, because you know what? If you think things are crazy right now, just wait till the first and second quarter of 2023. And in fact, I think that in 2023, for people that are positioned to be able to buy, they're going to be making a lot of money because the prices are going to have to drop. And the other thing, the one thing, and I don't know if we mentioned it, but it's not a bad thing, not a terrible thing from an investor point of view to buy at a relatively high interest rate, right? Mm-hmm. Because if you find the deal that gives you a positive cash flow with that high interest rate, let's say, for example, we, for an investor, you know, let's say for a 15, 20 unit property, you end up having to pay a 7% interest rate, okay? But somehow the numbers work out. Well, 2, 3, 4 years down the road, if those interest rates drop by 2 points, that's when you refinance and you can pull out a lot of tax-free money.
Oh yeah,
out of that property. So for investors who are thinking, oh man, those interest rates are killing me. No, they're not killing you. You just have to find the right property, and that's what we are doing all the time, looking for that right property, because we want to position ourselves in a way where through our management, rent increases, efficiencies, and then if you factor in a drop in 1 to 2 to maybe even 3 points at some point in time, that's where the money will really get made. So I just encourage people to be patient, to look for those opportunities that are out there. Any final words of wisdom for our audience, sir?
No, I think we gave a lot of information really fast. You know, absorb it all in. I have no doubt the rates will come back down. We've seen the cycle in our life over and over and over. This is not the first time it's happened, and it won't be the last.
It won't be the last. Yeah, the day will come when they're going to go up. They'll peak at some point, and then they'll start coming down. So
hey, for the listeners, we hope you enjoy what we talk about, and if you do, give us a thumbs up. Subscribe to our channel. Get notified when we have a new video that comes out. We usually post this around Wednesday, Thursday every week, and we do have a weekly newsletter that comes out every Sunday night or Monday morning, and it's free. So get a hold of us, realestatehedgehog@gmail.com. Just send us a, hey, can you please put me on the newsletter? We'll put you on and you'll be part of it. And you can see our journey from week to week, what we do, and follow us. And then also, you know, I know you put a lot of research into the body of the article talking about the current market trends, tips and tricks, and how to get into investing and be creative and basically come out on top. So I think everybody should take a moment, read those things, get on that list. If you're only a watcher, become a reader too.
And and hopefully at some point in time, the audience will join us in a couple of investments as things come up. We'll let people know. And for those that are ready to go ahead and pull the trigger with us, we'll go out there and start building a real estate portfolio. So okay, Sam. Well, thank you for everything, buddy. I'll be talking to you soon. And for our audience, we hope to see you on the next go around.
All right, guys. Have a good one.
Take care.